And we're going to be talking about digital transformation and investing for insight. That is basically where do you put your money, right? 30 years ago, the buzzword was computerization. 30 years later, it's now digital transformation. And the only difference you have over here right now is that normally they would say, for a CFO, are you putting your money where your mouth is? Or in today's context, are you putting your money where AI tells you your mouth is, right? So that's, that's the difference. So with that, I want to, ask my panelists right now, uh, how do you evaluate your priorities with digital transformation? How do you allocate capital? I mean, which are the areas you think you should put your money in for sustainable growth? And I'd probably start with you, Amit.
I think what you rightly said is basically rapidly digital transformation. It's actually transforming rapidly. Uh, I come from mutual fund background, and there are this industry per se is very much regulated, and one of the industry most regulated industry in a way. And what happens, every alternate week, you get SEBI circulars, you get all those guidance notes, consultation paper and all where you need to implement those. So, and it is humanly impossible, to do all those things. So one of the aspect on digital transformation is also that way. What we do is basically, bifurcate this entire digital transformation journey between three buckets basically. One starts with the forced digital transformation or maybe the regulatory digital transformation, where if there is something needs to be implemented, you don't have any option but to invest money over there so that, because compliance breach cost is something which you can't afford in today's time. So over there, without seeing what is ROI and all, you need to do. Just for example, this prevention of market abuse circular which came in, you need to anyways do it. There are trades which gets tracked at what, if there are any suspicious trades and all. And then the system goes for the call recording and, checks the team chats of fund managers. So it's humanly impossible. You don't have option but to invest in those. The second, generally what happens, in these kind of implementation, the good part is basically we as an industry do it together. So what happens, you can implement it uniformly and also save on cost. So that's the good part for all these regulatory implementation. The second is more on hygiene factors and, little bit upgradation on our existing softwares where we feel by putting little bit upgradation and all, if there are any, if this increase the efficiency, they increase the productivity, then we go ahead with those. And whether it is as small as, maybe generating payment advice for vendors or maybe giving direct access to vendors for our existing software so that their invoices get tracked, in a better way. The last one is something which is basically discussed and debated, which is, major technology overhaul or maybe major technology upgradation. There, the discussion happens between CFOs, CTOs, and senior management, whether we want to go ahead or not, whether there is any long-term benefit towards that or not, whether the cost-benefit analysis will be beneficial for the organization or not. Once that is done, then we take decision whether the investment needs to be done or not. So, for example, in 2022, as a group, we moved from Oracle ERP to Oracle Fusion. It was a group call, and then we thought that it will be beneficial in a longer term. Right. At our end, now technology team is moving the entire database to another Snowflake software where from a long-term perspective, from a data security point of view, it will be helpful. So broadly, what we do is basically bifurcate into these 3-4 buckets and then decide how we need to invest, allocate capital over there.
Okay. Mandeep, in the fintech space, like in Policy Bazaar, how do you go about allocating capital? What are the key indicators you look at?
First of all, thank you, Financial Express, for inviting me over. And this is a session just before lunch, which means that we'll be, have to be really efficient
People
here.
hungry for data and hungry for lunches.
Okay, so I think since morning everybody is talking about digitization, automation, AI, and so I can actually pick up from each session and say that somebody can quote someone. But I like to quote Dipesh, who said that you have to define the problem sharply. But the problem is, these problems are too many. So when you have too many well-defined problems, then how do you pick up which one to, to go for? And that's where I think the other quote I can make is from the Finlizer presentation, where they said that the monk said, nothing has changed. I said nothing has changed, but yet everything has changed because the lens we apply now has changed. For example, I heard we have no option but to invest in technology. If you look at it as compulsion, then it's altogether different ball game. But if you look at it as opportunity, then you are far more open to invest, right? That's the lens where you start taking bet. Traditionally, the CFOs and business will look at any investment opportunity and validate it with historical data. What are the assumptions you are taking? Are they valid, not valid? What would be the ROI, etc.? What we are experiencing, specifically last, let's say, a decade or so, is that the startups, new business ideas are coming, and there's no data to prove anything, right? This is niche, never tried before. So startup by definition will be either playing on the edge of technology or on the edge of the regulation or the compliances, interpretations, right? So which means that there is nothing proven. Then how do you take this call and prioritize, investment in digital assets?
Right.
And that's where the lens changes from, investment manager who will purely look at historical records. You start to take bets. You start to take bets based on the conviction your team has, whatever data point, even if it is not strong enough, whether they give you any conviction or not.
Right.
Right? So that's basically the thing is, but when I said nothing has changed and everything has changed, nothing has changed is like, there's a book called Will the Boat Go Faster? The principle remains same. You are investing because you want a return. Now return will not be quantified in every case. So at least there is a lead indicator or some indicator, some parameter need to change. And that's where it becomes an execution game. Further, the third point is that today the money is not the constraint for digital investment. It's the supply side, rather saying that, the IT teams are not, doesn't have bandwidth to do this kind of investment. So you have to prioritize from their bandwidth perspective rather than money perspective.
Okay. Right. Coming to Deepal, again, a very different industry from the logistics industry. What are the, and here you'll probably be a little different from the rest. What are some of the, technologies in your line of work that you're excited about and, the kind of insight where you want to allocate capital and invest in?
Yeah, thanks. Thanks for having me. So I was just looking in the panel. I think our industry is an absolute brick and mortar industry. We actually deliver cargo. So we cannot completely be digital. And possibly we deal with ports, shipping lines, and airlines. So they are also came in as a last wave in terms of the digitization. But I think when we're looking at capital allocation and looking at sustainability of business, I think the most important thing to understand is that the entire world, the whole landscape is moving digital, from your customer acquisition to your information in terms of where your cargo is. Yeah, and there are a lot of platforms which are coming on which just probably are not delivering cargo, but at least connecting the customer and the vendors. So there was a drastic need of any of the logistics business to actually move digital. The shipping lines also, though many of them obviously were brick and mortar, but they also started moving their bill of ladings and everything digitally. So I think in today's world, I think every business, I'm more particular because ours is an absolute delivery of cargo. And on a lighter note, in one of the B school talks, somebody asked me that aren't you threatened by this digital e-com? But I said we are not threatened because finally, if you what did you order, and if you ordered shoes, somebody's going to come and give it to you, right? Till obviously, your 3D printing takes leapfrogs into something which you can do at home. So I think with the changing landscape, there is no company which can avoid digitization. So that is my view. And more so, and we see this more of a reality for us being a logistics company, which is a pure brick and mortar. So it's a customer's requirement of instant information of where your cargo is, trying to connect to the customer digitally. And we actually had a very interesting thing, which I would like to share, is that just pre-COVID, we launched the app for the customer booking. And it was February of 2020. We launched it. And we did not, of course, know that time that, COVID is going to hit us. And when you actually launch an app, you see that generally the conversion from physical form of booking to digital form of booking takes time.
Okay.
Generally you have 5% customers moving this. Fortunately, because of COVID, more than 60-70% completely moved to digital, and then it's a way of life. So today the whole system is that they want everything instantly. So even cargo booking, even in digital commerce, like you see all the new age e-commerce companies and the delivery apps and all. So I think coming back to the main theme of capital allocation, it's not about growth. It's about sustainability and survival of business.
Okay.
So I strongly believe that all CFOs, more particularly, have to very clearly chart out enough capital to make sure that they are digitally at least ahead of the game against their competitors. Both, it also saves a lot of cost. So I think enough capital should be allocated to survive and to grow, I think. It's not only growth. Yeah.
Okay.
Yeah, thanks.
Allocate capital for survival as well, yes. I'll just come to Rahul before I come to you, Anuj, because I just want to take this discussion ahead. You've heard the other panelists, and you've seen that a lot of this decision making also depends on the kind of data you have. So I want to ask you how you are leveraging data and to some extent AI now in your systems to enhance your decision making processes when it comes to capital allocation.
So of course, as far as capital allocation is concerned, from the point of view of the priorities first, priorities for us in Forbes Marshall were very clear right from the beginning, right? Being in the manufacturing sector, the first priority was to build operational excellence. So all the digital transformation we did was first prioritized to have a very good operational efficiency in our manufacturing processes. That's where the data part came in, and how we first gather the data, what we have, which is coming from manufacturing, which comes in tons in quantity. And that's where various tools were used, and also Oracle also helped us in getting that much of information out of data. And the second thing, of course, when we did like operational excellence is like building means capacities in terms of having SCADA in our test rigs, or having a kind of tool automation system for Forbes Marshall. So that's where I think we started prioritizing our digital transformation journey. The second was, of course, customer centricity, and the data part of it was getting the customer feedbacks, getting the understanding the needs of the customer in a digital format much faster than a person would go and talk to customer and get it. So that was second. And of course, many companies do mistake, which we didn't do, fortunately. The third one is the collecting data information from the entire supply chain. If you are digitalized fully and getting into digital transformation to a great extent, but not worrying about the entire supply chain, that for a manufacturing company is a big no-no, becomes a big failure point. And that's what my suggestion would be to all CFOs is to think end-to-end. Collect end-to-end data, use these automation tools and data gathering tools, make information out of it, and then use it for your journey on digital transformation.
Okay. Anuj, coming to the other side, you work with so many companies in terms of, helping them with, leveraging data and all that. And how do you as Oracle, help over here in terms of being able to tell them where's the right place to allocate capital or with AI in, simplifying the decision-making processes?
Yep, sure. Good afternoon, everyone. And thanks, Roshun, for having me here. I can give a very inside-out view of what we see in the market. I represent Oracle. And in my role, I go and meet the finance leaders, finance functional people, and get a good sense of what's happening in the industry as a whole, right? I personally feel with COVID behind us, but with COVID, we not only got a big jump of what we call as a digital transformation which got adopted by everybody because everybody realized those times of having on-premise applications and teams managing that in the data center is passé, right? You need things which are hosted on the cloud. Along with this digital transformation bit, what also came very strongly is the wave for AI, Gen AI, machine learning. And this wave just didn't come as a lingo in the market. Increasingly, it is getting adopted by functions of any organization. So I'll keep this specific focus on finance. What we see in the market is AI, data analytics are having a direct bearing on how financial reporting is happening by organizations. I think it is making the finance leader job, it's complementing the job of a finance leader, these technologies, by helping in taking more data-driven capital allocation decisions, right? The advanced analytics in today's platforms tell CFO or finance leaders or the leadership of an organization, for instance, which are the projects which are profitable and which is where the resources should go in, right? And that visibility is at the organization level. So where the top resources should go, which projects are profitable, these are things which are available, click of a button, right? The overall efficiency model of an organization, the risk management profile of organization has increased much, much better over a period of time by inculcation of technologies like AI. The AI agents which come in the platforms today helps finance leader take much more informed decisions, right? Now, these are things which it brings on the table, right? But things aren't as rosy as I'm trying to make it look. There are, of course, challenges on ground. And it would be only fair on my part to speak about them, right? At a finance leader level, to drive the right kind of data requires a lot of data hygiene in the system, which most of the organizations it's missing, right? Disparate data is lying in disparate systems, bringing all of it together, running analytics, running AI algorithms on it, very, very difficult, right? And one of the very recent, I think this week itself, one of the finance leaders, CFO I was meeting, he mentioned that, well, he wants to take his finance organization to the next level through technology by bringing things like data science and AI into his function, but he's not getting the right resources in the market. So the talent and skill gap is real in the market, right? How do you fulfill that? Every finance leader in this room would be running some financial application. It could be a SAP, it could be Oracle, it could be Microsoft, right? And when you bring in these data science technologies or AI platforms, there is a real ground level integration issues which needs to be sorted. If they are not sorted, while these projects will get kicked off, but I doubt they will see the light of the day. So a lot of diligence and a lot of thought has to go from a planning perspective to bring in technologies like data analytics, AI, ML into the organization, because the roadmap of how they will coexist with other applications of the organization has to be very, very clear at the leadership level. If that is missing, I think that is something we have seen a major reason for projects not seeing the light of the day. These would be my few thoughts on this, Roshun.
Okay. Interesting. I mean, like you just mentioned, there's a whole lot of data and the kind of data that is that organizations have. And that brings me to the next question as CFOs over here. How do you balance, like, okay, so you are looking at technology, speeding up processes, giving you, instant decision making and innovation, of course. But how do you balance all of this with security? How much of a priority is security when you take your investment decisions for allocating capital?
Sure. I think great question. I think what we talk about all these digital transformation, but what we also know that, along with this digital transformation, the inherent risk which comes is basically this cybersecurity threat. So at our end, or maybe I think how we should do is basically what we bifurcate is basically we say one is internal risk and one is external risk. Internal risk point of view, there are so many, training which keeps on happening for the team. On a quarterly basis, our technology team does the, training program, tells what is do's and don'ts. Then there are, what you call, the mails which are sent basically just to check whether employees are, clicking on that emails or not. So you should not fall on that trap basically. So all those programs are run basically from an internal risk point of view. External risk is something, which I think everyone is struggling today, and we can see, so many things happening around the world. But, there's data security, you need to do the access control. There should be monitoring on how data, who is accessing the data and all. Plus, we are also working on cybersecurity thing along with our technological partner. So all these things you should continue. There should be backup plan and everything. However, the most important thing is basically when these things happens, you should also have the fallback plan. You should also have, the recovery plan. And also, if all these things are in place, I think you can minimize the risk. And at the same time, when the new projects is implemented, the first and foremost thing is basically to get the clearance from the ISG team. And without that, you don't go ahead and launch any project. So once ISG team is basically satisfied that, there is no problem, because ultimately you have to share data and everything with the vendors and all. So from that perspective, if it is clear, then only we go ahead.
Okay.
So all those things needs to be taken care.
Right. And just to take another point which Anooj had mentioned was, finding the right talent in the market. And Mandeep, if I have to come to you, in this whole digital transformation journey or investing in, in talent, how much of your capital allocation in an organization like yours goes towards, investing in the right kind of talent here? And how do you find them? Because the skill sets, as you said, are few and far between.
So as an organization, we believe in building versus buying out, building versus, even outsourcing. We try to do everything in-house, and we are, touch wood, pretty good at it.
Okay.
Our IT team would be about 800 people, right? That basically shows our commitment to this particular philosophy that we want to do it ourselves. So that's on the technology side, which basically, serve the business and the overall organization. Within finance, we have started inducting data scientists, and typically people, in interviews, even for revenue reconciliation, we are asking questions like, are they familiar with the Power BI, Python kind of thing? We do this training program as well. But a couple of stories, if I go back to my previous organization where, this particular thing was appreciated, and this could be something to, kind of a case study as well. So we realized that, the IT team has a limited bandwidth, and finance agenda is always at the back. Generally सबके साथ होता है, finance के automation के लिए पैसे नहीं मिलते हैं तो IT वालों का time नहीं मिलता. So we were struggling with this particular problem. So we started training few people on Microsoft Excel macros. So they got trained. And then we were trying to do some of the RPA implementation in-house. But there was few challenges. So some of the guys in the finance, junior guys, and probably they were not even graduate, right? They started picking it up. They saw YouTube videos, etc. They talked to their friends who were doing RPA and reached to a stage where they deployed RPA in finance. They became an expert to automate about, they saved quite a lot. I mean, filling forms, GST reconciliation, everything. The RPA was deployed, and we became so expert that we started to export this talent to the IT team or to the other functions, saying that if anybody wants to do an RPA, there's the guy or two, and then he trained another. So what we did, essentially, we developed citizen developers. Okay. Civilians, right? Not the IT guys. So those developers, and that's the kind of training will be required. If all transactions are automated, no data entry is happening, accounting entries are happening automatically, there was no approval in the employee reimbursement, then what would my staff do? Actually, they will start doing auditing. Okay. And nowadays, auditing is being done through the software, data analytics, etc. That's the kind of training we started giving to the staff. So this is the direction I see. This is how the evolution of finance team and the talent will happen.
Okay, interesting. But of course, with all of this, I mean, when you're putting money in, you also expect something back. So I want to switch to the ROI question, which I think everybody here, wants to talk about. So how do you track the efficiency of the investments that you're making, especially, what are the kind of KPIs that you look at? Mandeep with you, and then after that with Deepal.
So I think, again, will the boat go faster, right? So there are various measures, right from top of the funnel to lead generations to conversions, and so on and so on. The automation, essentially, you will say either it is efficiency oriented or experience oriented. Decision support, automation, and AI hasn't happened as yet, right? It will happen, but as yet, सिर्फ ये दो ही हैं, और इन दोनों को track करना बड़ा ही easy है. So you have to figure out one lead indicator or a lag indicator and start tracking it. Other problem that happens is that after doing all this, the headcount still the same, right? So that's a question often I get from CEOs saying, "Ki ये सब कर दिया, investment you have done, and you were saying that it will reduce effort, etc." Where still the same manpower, but look at it, same manpower for 5 years, business volume getting triple. We were able to generate because we were doing automation. So it's a proof of ROI. But I think it's more of a conviction than ROI that is required.
Okay. Yeah, Deepal.
So I think the way we've done this is to get an ROI, I think first important thing is to avoid wastages, to be very clear in terms of the BRD, business requirement document. So, we've seen, very loose documents. And then when you start the project and when we go ahead, you see, that small animal becoming a large dinosaur, and both in terms of cost and in terms of scope and all. And then the outcome of that is very little. So I think the way we look at it is we are very distinct and clear in terms of what is the requirement, what is the ask, and what is the business benefit case against that. One. That is the most important thing. That is very important to identify. People don't spend too much time on that. I think we spend a lot of time on that. What do you want and what is the outcome? Either it is savings, it is cost efficiency, it is customer benefit, and there has to be metrics to measure that. You cannot have a very vague statement, right? So that is one step to getting because see, computing is also very important, making general statements and then, you not even be able to track it becomes very difficult. So that first step is to get the clear documentation done. What do you want? Second thing that we've done in many cases is when we have external partners, we actually engage on a success-based model. So outcome-based and success-based model. The moment you keep it a fixed fee model, your ROIs will tumble. And if you keep time-based models, your ROIs will tumble. And the third part, I'm going to keep it crisp. The third part is extreme tight governance on that. So we have steering committees on a week-on-week basis. We rolled out, I think, an ERP across 80 countries in a year's time. And I can very confidently say that there was not any cost overrun, right? So that is because we were absolutely on track in terms of, what is the ask, what is the deliverable, and there's a success-based fee on that. So I think that is the way to kind of drive this particular ROI. And once that is clear, your ROI, and before you start the project, once your BRD and ask is clear, you know the ROI.
Correct.
The rest is just, I think, more governance, I think. Yeah, thanks.
One thing which Forbes Marshall has done very well in this area is basically we didn't focused on silos, and we didn't focused on buying or investing in small automation tool. Instead, we first thought of investing in these tools or of automation in areas which touch majority of our population, our members, which runs across functions. And also invested in trainings, because we have a strong belief that investing in data insights or investing in digital transformation is like buying a gym equipment. If you don't know how to use it, it will ultimately be used as a coat hanger, right? And that's what happens. In many organizations, they just see, okay, somebody is using that, and they end up having 100 tools of automation. And that's where they go wrong, Instead of that, create a digital mindset by investing in some really good big tools which touch many members in the organization. That creates a mindset in the people of using or making decision based on data. And if that mindset comes in, they themselves will be able to make rational decision where to go, what to do in digital.
Interesting. Anuj, coming to the other side, you probably rolled out some of these products and with your clients as well. And you would have given them a fixed list of this is how you track the KPIs and this is how you use. But how have you seen that evolving? Have you seen the product, new demands coming in for it also?
No, we have. Look, we are in India for almost, if I can say, quarter of a century, a little bit more than that. And so as our products, which are being used by customers. Products have evolved. We started with those bare basics blue screens applications, which all of us are familiar with, to best-in-class cloud solutions that Oracle offer. Products have evolved, but on the ROI front, the discussions which we have when we go in the market, when we meet CFOs, finance leaders, broadly, there are 4 or 5 key themes on which the ROI discussions go, right? And I'll try to keep it brief. The first would start with how would a new technology like data analytics or AI help in improving the overall operational efficiency of the organization, right? Not just the finance function, but the larger operational efficiency. And if I talk about finance function, how is record to report process getting better, for instance, right? That catches attention, that is important, and is there a betterment in it, right? How is the supplier onboarding happening? Is there a supply portal which is coming? Things like that. So efficiency is point number 1. The second point is, are the new technologies reducing the manual interventions, right? When a new technology comes, is it making life simpler, better, or is it just another technology addition done by the leadership team? Second most important criteria. Third, specific to the finance function, compliance is a very, very big aspect. And my colleague sitting here would agree, irrespective of industry, this is a very, very tight leash, right? You can't slip on this. The new technology, is it helping you in becoming better and better in your compliance to the regulators? That's another third aspect of ROI. Fourth is about the insights. And fifth point, which is close to my heart too, and I'll perhaps give a live example of what Oracle has done. The fifth point is how is the new technology helping an organization to close the books faster and publish the results? Is there a correlation, right? For everybody in the audience and the panel, let me give an example of the organization that I represent, Oracle. So Oracle is famous, or over the period of time, it's become really better for a $50 billion organization to close books and publish results in a matter of 12 days, less than 12 days after quarter closure. Now imagine the scale, 120 plus countries, 150,000 employees, and annual revenues of $50 billion plus, which is $12.5 billion odd per quarter, right? That's the scale. And the proof of pudding is the software that we go and sell, we use ourselves, right? So how is the new technology helping in closing the books faster becomes the very, very key criteria for a CFO of an organization. And I just gave an example of Oracle because this is something which we do quarter on quarter successfully.
Yeah, Mandeep, you wanted to add to that?
I think there are a couple of approaches being discussed, and I kind of started thinking these are not relevant for businesses like us, because big bang transformation or ERPs is a thing of the past. Sabne kar liya, right? Everything has done. Now what we are doing is that we are doing, everyday technology is changing and a new idea is coming, right? So you do one thing and the shelf life of that investment is very small, right? So you have to be modular. You have to be flexible. And that's what happens. I mean, if you do, for example, if you do supplier portal, then you realize that, oh, now I can do a, OCR on it. Now I can do, let's say, a reverse auction on this, and so on and so on. So this will keep on going. Probably the approach would be that you have this as a continuous program. You need to have a roadmap in mind, and that roadmap cannot be a hard line on the, in the stone. It has to be flexible because the business, your competition, technology, everything is changing much, much faster than you are implementing.
Right, right. Do we have any questions in the room? Because I don't want to keep you from lunch as well. So, okay, we have one question there. Yeah, and one person there as well. Can we just get two mics across? Yeah, that gentleman first. Yeah, there. Just introduce yourself and you can ask a question. Yeah.
My name is Himanshu. So I work for research and development firm. It's a startup of mine. Earlier I was in ADAS and then data science. We were working in M Advisor, business intelligence. So I have an experience in automotive industry as well as this IT industry. So currently I was very much influenced by the product of blockchain and a lot of campaigns are being run on that. So there is capital allocation. For example, earlier when I was in my college days, so Be a Farm Dost was a campaign run by TAFE in our college. And coming to the situation where we are handling a lot of digitalization and new financial products need to come in picture, I'm looking for campaign allocation if CFOs are open to let compete on the basis of prompt engineering, like when we say AI and all, right? So as sir mentioned in previous session also, which I was wanted to ask, like he told, looking to the hiring procedure with HR, so men was given more priority, right? But we need to be very particular with the prompt which you are giving to all these intelligent softwares. So are these CFOs are putting a lot of money in their own training, coming to the prompt what they are putting? And secondly, if they are campaigns, are they open to allocate funds in some campaigns looking forward, either with blockchain technology also? That's all. Thank you.
Okay. And we want to take that on prompt engineering, any skill set training?
I think, I can't speak for many of us, but at least my impression is that we are just playing around with AI right now. We are personally using it for small tasks, small questions, but not heavily getting into prompt engineering because at some point of time that will also become a specialized job, right? A perspective for finance, right? Generally, you will say, okay, that give me this number, that number, etc., and so on. The computation is happening in some engine. What AI or prompt engineering is doing is a large language model which is converting your speech into a query, right? So how much ROI personally I'll get on my effort if I'm asking a question to a computer or picking up the phone and asking somebody, give it to me, right? The other thing is, the big issue in prompt engineering as well as AI is the audit trail, right? How that information has been generated, how I re-verify it, which is a big concern for people like us who want to verify everything before taking an action.
So, sir, there is a sister technology with AI, which I say, if you're coming up with AI, you need to promote blockchain also. So, I really feel if this could work together, all the challenges of finances, which is happening because of a lot of digitalization, right, that could be, I would say, improvised at a certain level. Because people are speaking of AI, but they're not speaking openly on their sister technology, which is blockchain.
Blockchain is heavily underutilized right now because the use cases are not developed and people don't understand, what it can do. A couple of years back, there was a study group in insurance industry to figure out the blockchain use cases, and all CTOs, they came out with the use cases of a centralized database. That's all. So this technology itself is underutilized, and over a period of time, I think the uses, as you said, the technology develops, interlinkages develop, and it will come up.
Thank you.
Okay. Yeah, the gentleman. Very quick because we're almost out of time.
I'm Arun Gowde. I'm a financial advisor. My question is to Anooj Mishra ji. In digital transformation and product innovation, do you, your decisions anytime influenced by what is happening with the competitors and all?
You mean Oracle's competitors? Yeah. Well, of course, look, this industry is heavily competitive and a very large-scale industry, right? Where Oracle operates. All the usual suspects in this field, you must be aware, Oracle, SAP, Microsoft. Look, and I should tell you something which all these organizations do. At a fundamental level, how a ERP should work, I think all the softwares will do it beautifully. The game is, how do you bring that X factor into it, right? And this is where organizations invest a major amount of their revenues on the R&D part of it, right? To make that product a notch better than competition. And that applies to all of us, all the players in this particular domain. And that is the reason you would notice India being such a large technology hub. Oracle houses 1/3 of its employee population in India. So a major part of our product development, innovation, engineering happens in India. And without naming the competition, I'll tell you likewise, the same thing is happening for them as well. So I think it's an ongoing thing which is changing on daily basis in terms of who makes the product a little better. But yeah, at the end of the day, it's customer who decides. But yes, a lot of investments are going in this field to make the respective products much more richer, better for customers.
Thank you, sir.
Thank you.
Okay. I'm just going to take a quick 1 minute answer from each of you, or maybe just a couple of you. And this is more on a personal scale. How have you evolved in this digital age with this digital transformation as a CFO?
Yeah, I think it's a journey. This digital transformation is evolving, but it's there. Same goes with the CFOs also and teams also. I think we also are evolving, but we are there. Just my say is basically what we do is we follow the AAA approach, assess, analyze, and then adopt. So assess what is your requirement, because without that, there cannot be any implementation. Analyze which are the softwares which are available, which suits your requirement from costing point of view, from your benefit point of view, and then adopt in phases. Don't just rush that. Everyone is joining the race, so we should also go and implement that, but do it in phases so that it's better for the organization.
Okay. Yeah, Rahul, I'll come in there. Yeah.
So basically how I evolved is, I would say I spent a good amount of time, I would say 40% plus time in business things beyond finance, defining strategies. We are also into digital services business as a force marshal, as a company, and we do track plants of various customers sitting in Indonesia, Middle East, and various places of the world sitting here in India, and measure their KPIs. So that is, I think, that's one thing is which has become a big part of my personal life is thinking of revenue growth through entire digital transformation, and that's a good thing.
Okay. All right. Deepal, a quick take on this. How have you evolved in this age of digital transformation?
So I keep saying this, and this is very important for everybody to understand. I think the lines between functional and IT are blurring. So more so even at the top level, at C-suite level, I think finance is no more just finance. It's many other things, right? And business partnering, and that when you do business partnering, you get involved into everything. So, and in the long run, all companies, in a way, will be technology companies, So it's very important to transform yourself as a CFO, to actually gain a lot of digital skills, At least you should have the ability to understand what technologies are coming in and how it's going to impact your business and how you can leverage them to improve your business. I think if you can't do that, then I think you will be left behind. So, moving away from just pure finance and accounting and many other legal requirements, I think your large piece of work will also form part of digital. So I think that transformation for a CFO at the mental level should happen. I think that is what I have seen, and I have been involved in digital transformation for at least now back from at least 20 years back as well. So, of course, things have, types of digital transformation or, those were ERP changes. Now it's moved. I have always been involved. So I think that is very important for us to do that. Yeah. Thank you.
All right. And Anooj, I'd let you have the last word here. How are you digitally transforming the CFOs you work with? How are you digitally transforming the CFOs that you work with? How have you seen them evolve in your line of work?
I did speak about it, but I'm glad people made this point, and I'll make this acknowledgement. We are becoming smarter and getting better ideas from CFOs in the market, which is helping in turn becoming more smarter, customer-oriented products for the finance community. So these are personal experiences of me and my team. Very smart finance leaders in the market. They end up giving you such beautiful nuggets of what should be there in the product. Fantastic ideas, right? Which goes back in turn in the ideation, and we try to see it brings in. So essentially, we are becoming smarter, courtesy what we see from our CFOs, and we try bringing that in the product.
All right, great. And on that note, that's some food for thought. And now let's also break for lunch. I'd like to thank my panel for this very insightful discussion. Thank you so much.